When you're buying a home for the first time, it can get a little overwhelming. There's so much to get your head around, like understanding complicated terms and getting all your documentation together. It can be tough, but luckily there's plenty of support available. And with the right support, you might just be able to score yourself a better deal on your home loan in the process. Today, we'll show you how. For this video, we've teamed up with QBE. As one of the world's leading insurers, QBE works with a whole range of home loan providers to offer lenders mortgage insurance. You can find out more about them and lenders mortgage insurance at qbe.com/LMI. Now let's take a look at some of the ways you can get a better deal. 1. Look for a loan that aligns with your values. Here at Finder, we do quite a bit of research, and one of the things we've uncovered is that 1 in 2 Australians are actively looking for greener products and services. And home loans are no exception. Over the last few years, more and more providers are offering green home loans. In fact, to encourage borrowers to invest in greener homes, many providers are offering special deals on these loans. For green mortgages, loans that are geared towards buying or building an eco-friendly home. Bottom line, by working with a sustainable lender, you can probably get a better deal on your loan. Number 2, consider, is it a forever home or a foot on the property ladder? So you've decided to buy your first home, but one thing you really need to think about is how long you plan to stay. Life happens and plans change, but if you've got a clear idea in place, you're going to get yourself set up with a better chance of getting a bargain. For example, you might be thinking about living there for a few years and then moving to something bigger or better. If that's the case, is it really worth getting the biggest loan possible? You don't want to tie yourself up with needless debt when you're just trying to get a foot on the property ladder. But if you're thinking about it as a forever home, that can be a different situation. It might be worth spending a little more to get the place you really want. Whether it's a starter home or your lifelong dream home, you might still want to consider making some eco-friendly enhancements. The 2022 to 2025 Housing Outlook Green Edition, commissioned by QBE LMI, uncovered a few interesting odds and ends. What really stood out was that adding green solutions to a home can increase its value by 5 to 10%. Additionally, the report also found that fittings like solar panels can save homeowners up to $900 each year in energy costs. So whether you're planning to sell down the line or stay in the home forever, you can benefit either way. The bottom line? Green home loan options can save you money and potentially add value to your home. Number 3, get financial assistance. There's plenty available. Buying your first home can be quite expensive, but fortunately, there are great opportunities to get some help. There are a number of government grants and programs, with the specifics and eligibility criteria varying from state to state. As well as grants, first-time homebuyers are also often eligible for stamp duty waivers or discounts, and these can potentially save you tens of thousands of dollars. Your broker or loan provider will usually be able to give you some information about the specifics. The bottom line? Depending on where you live, you could be eligible for grants of between $10,000 and $20,000 to get into your first home. Number 4, LMI may help you get into your first home sooner. Housing prices have dipped recently, so a lot of buyers are taking their first steps into the housing market. But due to rising interest rates, obtaining credit can be tough. This has had a real impact on the rising cost of living too, making it harder for you to save for a house deposit. And this is where LMI can be a really handy tool. LMI is a form of insurance that the lender may take out when their borrowers have a deposit of less than 20%. The lender may ask you to contribute payment towards the LMI as the product acts as a guarantee for the lender. Basically, if you stop making your repayments, the lender's going to be protected by that LMI. Its risk when lending to you as a first-time borrower is lowered. So if you've got the ability to make repayments but you don't have a big deposit saved, LMI can allow you to kickstart your purchasing process sooner than later. Bottom line, instead of having to save a full 20% deposit to buy your first home, with LMI you can buy with as little as 5%, plus the cost of the lender's LMI premium. Number 5, be organised to avoid extra admin costs. When you're buying a house, there's a lot of costs aside from the mortgage itself. There's loan application fees, stamp duty, building reports, and much more, and it can quickly add up. Now, you can't always avoid them outright, but by working with the right providers, you can often minimise your overall expenses. For example, using tools like a mortgage calculator can give you a rough idea of how much you'll be able to borrow ahead of time. It may also be worth working with a dedicated professional, especially if your situation is a little complicated. Mortgage brokers can work with you to help you prepare your documents ahead of time before you apply. Early prep work can also end up saving you time, money, and continual credit checks. Otherwise, you might end up wasting some time and you could potentially end up spending more on multiple application fees. Bottom line, the more organised and prepared you are, the less chance you have of paying extra charges and double up application fees. And that's our tips for getting a better deal on your first home. You can also compare a great range of home loans on the Finder website. To find out more about QBE, visit their website. And if you enjoyed this video, subscribe below.